who's at the table with us. Hugh Johnston, Disney's CFO and a member of our CNBC CFO Council. Julia's here as well, and we get to actually sit with you now and walk through the numbers. You know, it was fascinating to me watching the futures this morning as that announcement got made. I think there were people, in fairness, that were disappointed early on with maybe some of the results because they were looking through some of these numbers, that DTC number coming in a little bit light on the revenue side. And then as they continued down and saw the guidance, not just for this year, but I think more importantly for 26 and 27 double-digit EPS numbers, they said, oh, maybe this is looking better than we thought. So let's talk about that. What are the challenges that you're confronting right now? And what does that actually look like? And then what gives you the confidence that the numbers are going to look so meaningfully better when you get into 26 and 27?
Well, I think the fact that we've had such a strong 24 overall has been an important part of the guidance that we're giving, right? So if you think of the big initiatives that we've invested in, putting creativity back at the center of the company, and the couple of billion-dollar movies and all the Emmys have actually driven terrific creativity results out of the company. Then on top of that, we said we wanted to improve streaming profitability, and we're clearly doing that in a substantive way. And then we're investing in the parks because we have such great returns in that business, whether it's theme parks or cruises or even consumer products. So if you put all of those pieces together, I think 24 in many ways was the pivot point for the Walt Disney Company. And we have enough confidence now in the results that we're seeing to say we really can guide for the next couple of years.
Now, this is incredibly unusual. I've covered the Walt Disney Company for years. You almost never have given guidance this far out. Right. What made you decide now, not just to guide for next year, but over the next 3 years? And are you concerned about things like hiccups in consumer spending or even a potential pullback in the economy to impact that very long-term guidance?
Well, we always are going to worry about that. But that said, you have to make a set of assumptions around what the consumer is going to do. And we see a consumer that's slowly but steadily likely to get better. And that's certainly embedded in the guidance. Beyond that, with the significant investments that we've made to build a DTC business, and we need to remember, it's only been 5 years since we started that business, so it's relatively new. We took some operating losses to stand it up, but now it's a business with 175 million subscribers. It's turned profitable over the course of the last year, and we see lots of profitability in the future. So the investments we've made there, and then on top of that, the investments that we're making and are going to continue to make in cruise ships and parks, we felt like we needed to give investors not just the current business results, but to set an expectation on what the return is on those.
You got streaming and ESPN all figured out. At this point, what I think this means is if you can say double digits, that's like the base case for you.
You're trying to drag me up already, Joe?
I'm trying to get you to even say it's pretty good. But if you're confident in saying that, I think if you're confident in saying the low end of things, I think you think it could even be better. But I'm amazed that you. Plus, you got whether movies succeed and studio stuff. The visibility is very hard in that business.
It is, but if you look at what we did in terms of creativity, particularly in the movie business, right? We were generating too much content 3 or 4 years ago in order to feed the streaming service, and frankly, quality suffered to some degree. When Bob came back, he made it clear we're going to prioritize by virtue of less quantity and better quality. And that's kind of what you've seen, whether it's all the TV shows that have generated the Emmys, or whether it's Inside Out 2, or whether it's Deadpool, and now we obviously have... we've got Mufasa as well as Moana 2 coming out. We have a lot of confidence that the creative process now is really tightly wound. Right. We do maybe 5 movies, big movies a year. I think you'll probably see 2 great ones, 2 good ones, and then maybe one that's just okay.
Right. Hugh, and this is a topic that maybe is close to home here at Comcast because there's a question mark about the linear channels or the cable channels and whether they should be spun off at Comcast, including this network. I ask because the linear piece of your business down meaningfully this quarter. Right. And the question is, there was a period of time where Bob and you and others were considering spinning that business off. You chose to keep it. What happens now with that business? Do you think that you should have kept it or you should continue to keep it? Would you consider ever spinning it off? And sort of how do you see this?
Yeah, I like the portfolio the way it sits right now. I wouldn't change anything. One of the first things I did when I became CFO of Disney, and Bob asked me, he said, look, fresh eyes, take a look at this. And I came back with, look, you can do spreadsheet math to justify just about anything. But when you look at operationally what it takes to do that, we came to the conclusion pretty quickly this is actually a good integrated portfolio, and the cost of doing that is probably more than the benefit. So,
meaning what? Spinning it off would
spinning
require
it off
too
is,
much.
It's just too much operational complexity in terms of trying to separate the assets relative to the benefit of running an integrated entity between linear and streaming. In many ways, if you think about it, it's just a natural hedge anyway, right? So as people leave one distribution channel and move to another, it's the same eyeballs watching the same content.
Well, part of the argument, and I'm curious what you think of Comcast's even contemplation of this, is that it's a drag effectively on the multiple of the company, and whether you can capture some kind of multiple as a spun company that you can't in the public markets.
I think right now, for Disney, given the size of linear in the context of the overall size, the amount of multiple we'd have to pull in to make that worth it, it just isn't a deal that's worth doing. So,
do you think you were late on that, by the way? Meaning, if you had done that 5 years ago, it would be a different conversation?
I wasn't here 5 years ago. That's a tough one for me to say. What I would say right now is I like where the portfolio sits because I like the integration of the two. And linear, by the way, does have a very separate demographic, as you guys well know. It tends to be a little bit older, and we want to make sure we don't lose that demographic. So I'd rather keep it as a part of the portfolio.
Just going back to the guidance, did the election play a result in you being able to issue this guidance? In other words, looking at corporate tax rates, let's say.
None whatsoever.
None. Okay.
Yeah. Well, I don't know what's going to happen with corporate tax rates, candidly.
Since the election, there's been so much speculation about the media M&A market opening up. You said you're not interested in spinning off those linear assets, but are there other deals you'd be interested in doing right now?
Really the same answer. I like our portfolio as it exists right now. Look, we have an obligation to look at things when they come along, and we'll certainly do that. And if something makes sense for us, we're not by any means afraid to do it. But our portfolio is really good right now, so I'm happy with what we have.
In terms of the streaming business and the big boost in profitability you saw this quarter, how much of that was due to the bundle that you offered consumers with Max? And do you expect to do more bundles, if not all outright deals, but bundles, especially in the streaming space?
We're not assuming we're going to do any more. We're always open to good ideas. So bundling clearly helps with churn. And Max, we think, is going to be good and additive, but it's not critical to what we're doing. Really, what's critical to what we're doing is the IP that we're generating.
What's your base case now for the sports bundle that is now on pause?
You're talking about Venue?
Yeah.
Venue right now is in the courts, so I'm just going to sort of let
But does that get calculated into any, when you start to think about what the business looks like 2 or 3 years out, do you just not even in your calculation?
Right now, I'm assuming that court case is going to play out. If Venue doesn't happen, Flagship will probably do more, the ESPN Flagship products. So I think we're basically hedged on that either way.
Can we talk Succession? Obviously, that's something everybody is fascinated by. We've heard new reports about James Gorman now looking outside of the company for a CEO. We've also heard about other permutations where maybe Bob becomes the chairman and Dana becomes the CEO, and you get an even bigger role.
I've got plenty of work to do right now. I don't need a bigger role. Listen, what I would say on Succession is just very simply this. I think this board is really being very, very transparent with investors in terms of its process. I think they're taking their time and they're appropriately trying to make a good decision. And my expectation is they'll make a great decision in early 26, as they've indicated. Beyond that, I think people like me need to focus on running the business. Let the board worry about Succession.
Before you head off to your earnings call, want to make sure to get your insight into the state of the consumer, because you have such great visibility through the direct-to-consumer business and also through the parks. Spending at the parks was up, but attendance was flat. Right. Typically, you're growing attendance. What are you seeing in terms of the state of the consumer, and are you concerned that attendance did not increase?
No, I wouldn't say we're concerned at it, because we saw that coming in advance with the bookings and things like that. I think the consumer is gradually strengthening. So I think there was a period in the first half of this year where the consumer was really locking down because inflation hit them so hard, and people were struggling, particularly the lower income deciles. I think you're seeing a very gradual strengthening, which is part of what we see in the streaming results right now. And our expectation is the parks will continue to gradually strengthen as well. As we noted, we'll probably do better in the second half of the year than we did in the first half.
Can I just circle back for 1 second to sort of the regulatory environment? And I was mentioning the Venue sports issue, but the reason I'm raising it is there's now a renewed or newfound enthusiasm or view that, you know, the floodgates are going to open. There's going to be all sorts of M&A activity, and there's going to be strategic partnerships that might not have been allowed to take place before. You talked about the success with Max,
right.
Partnering. What do you see happening here? How does the chessboard change, and where do you fit into that chessboard, do you think, over the next year or two?
I think right now we have a portfolio that is just right the way it is. So I don't think that we necessarily need to make any changes.
But would you see deeper partnership integrations? Are there things that you think you can't do today that you'll be able to do after January 20th?
It's so early to speculate on that. I mean, we're literally 9 days out after the election. So and
I'm sure you've had that conversation with somebody.
We're certainly thinking about things,
right.
but candidly, I think we need to sort of let this play out for a little bit longer before we take a guess on what the regulatory environment is likely to be under a new administration. It's just too early.
Do you serve Pepsi at any of the Disney parks?
We do in Shanghai.
In Shanghai, but Coke everywhere else.
Coke
right?
everywhere else.
Did you have an allergic
Seven
reaction?
Dwarfs back or not?
The Seven Dwarfs never left, as far as I'm concerned.
You sure?
I'm sure.
That's a bigger question I'm asking you. So
I understand.
Okay, all right.
Hugh Johnston, thank you for being here. Julia, thank you for coming in.
Thank you. Great to be with you all.